Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Tuesday, 3rd day of March, 2020, and this is the Daily Report for Gold and Silver. In an unexpected move, the Fed had an emergency action today and actually cut rates prior to the FOMC meeting, which will begin on March 18th. This is a very rare occurrence. I don't remember the last time the Fed acted outside or in between FOMC meetings. Now, the initial reaction was flat. The stock market was trading higher. Gold was up very little. But when Jerome Powell took the podium for a press conference, everything changed. Gold ran up dramatically higher, and the U.S. equity markets basically tanked. Over a 700-point drop in the Dow. We'll take a look at our price board, and then we'll talk about how we're looking at gold at this point after this dynamic move. Traders, this is truly a day that came without any warning whatsoever. When the Fed meets, we have certain expectations of the outcome of an FOMC meeting, but the occurrence of doing an emergency move between meetings is an extremely rare moment, and it caught a lot of people by surprise. In fact, the market was fairly flat after the statement came out. It was not until Jerome Powell spoke that we saw gold just take off very quickly, and the stock market basically moved down 700 plus points. As you can see, we are at 1641.60. That's a $46 move in gold. In the other precious metals, we saw platinum gain $19 at $878.70. We had palladium lose 1.3%, $32 at $23.95. And then finally, we had silver up 47 cents, at 17.21. To give you an idea of the carnage, we are looking at the Dow that lost 785 points. Let's take a look at our studies and our current game plan. Traders, if you recall, yesterday had some pretty wild swings itself, but today was out of the unusual in that we had that surprise move. Now, as you can see, this is yesterday's candle. It is basically a doji. It is green, but color isn't as important, but it does form a strong pattern with confirmation, and that is a bullish Harami cross. The definition is in a defined downtrend, we meet that criteria, you get a very large red candle. That's quite obvious, and it's followed by a doji. And the important thing about the cross becoming a Harami cross is that it has to occur somewhere in the middle, but you cannot take action on this reversal pattern without the confirming candle. Today, we got that confirming candle because we had a market with a higher low than the previous day, a higher high, and in fact, the highs matched the top, which is why we know that we have some fairly strong resistance right in the area at about 53, these two tops here. So what I plan on doing is on a strong open that breaks above this resistance line, that would trigger a buy. We might see the market come down a little bit, and all things being equal, that would give us a better opportunity to get in at a more viable price point. In either case, today forms a pattern which is the confirming pattern of a Harami cross, and that is something that we want to act on. And the other thing that we talked about yesterday was the fact that that low on Friday came exactly to the 50-day moving average. As long as we're above the 50-day moving average on a technical basis, short term we're in an uptrend. So we have to pay attention to that. We want to position ourselves in the best way possible, and I think we will have the opportunity. Now, lastly, upside, where do I think the market could go? I think it's got to challenge the high that came in here, which was 1690. What it comes down to is we want to take out the resistance area that we spoke about, and if it does, we want to act accordingly. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.